So there's a psychology term called cognitive dissonance. What cognitive dissonance means is that you hold something to be so true in your heart from what you know in life that you're not willing to consider or accept what the actual outcome might actually be. So you don't want to think or accept what you don't already know. This talk today is going to be primarily for the upcoming retirees or people that are old enough where they may think they're going to retire in the next couple of years. It's surprising for me always when I try to talk technology or certain things in finance, such as market downturns with older people in the older generation. And it's because they usually brush it off pretty quickly. But what surprises me is that they've already lived through it. And I would think that if they've already lived through it, they can understand and appreciate that it can happen again. In 2007, 2008 was not too far ago. Wasn't too long ago. I remember I was in my undergrad at that time. I was a little young. I personally don't remember much about that time period, but my parents do. As do most everyone under the age of 27 or over 27. Well, back in 2007, you guys had lived through the housing crisis. So during today's talk, we're going to talk about how what I think we're entering is just as bad as the housing crisis, but the housing crisis was the start of what's still going on now in a larger credit crisis and corporate debt crisis. And I've been very passionate about getting out there and speaking lately because we're actually getting closer to this event. I've been following this for 2.5 years now. I've been talking a lot. Some people that know me close know me. I'm passionate on the economy and where we stand. And it wasn't until the coronavirus that things started speeding up very quickly. And significantly, there was a couple events that happened this past week that are just setting off more signals. So, I found the courage to get in front of a camera and actually talk about it. I'm also not the person that really gets in front of a camera. For those that know me, I deleted my Facebook page and all social media about a year ago because I got tired of, at a minimum, the tech companies monetizing my data and not paying me for it. So for me to get back on here and actually record myself, it actually means something. So listen in. All right, so how do we get here? Where are we now? Well, all you retirees, you remember the housing crisis. That was just the start. Over the last 10 years, 10 plus years, interest rates have been at zero or near zero. Businesses and banks have been able to borrow money at almost no cost. And what that's done over the last 10 years, 10 plus years, has beefed up the credit and debt issue even more. But it's also completely broken the system. What happened in 2007, it was supposed to collapse then and fail. And the central banks and the Fed have continued experimenting, and the truth is that the system hasn't worked. That free printing over the last 10 years has also made the wealth gap just as bad as it is now. Ray Dalio at Bridgewater had a really good chart that they released where they show wealth inequality in the country on a chart. And right now the wealth gap is just as bad as it was in the 1920s. It's also where we see populism in politics right now. So that's correlated. So we have a big debt issue. We know the wealth gap is extremely bad. There's also a corporate debt issue. We have the largest amount of corporate debt in the world than we've had. And a lot of that debt was corporations and CEOs buying back their shares to boost their share price, which, by the way, is illegal. That's manipulating your stock price. But it wasn't until deregulation a few years back that that was allowed again. So you have these CEOs over the last couple years that have been taking out debt at 0% interest rate, free money, buying back shares on the market. And I know this because one of the companies I worked for was doing it, and they weren't the only one. It's been a lot of companies. But they're buying back shares off the open market, which manipulates the stock price by making it higher because you're removing shares from all the existing ones, so each one is worth no more now. So of course the stockholder sees it. You guys see it as workers in your 401ks that the stock price is going up, and you think it's a great thing. You think that the business is actually earning money, when in fact most corporations and most businesses on the public market over the last couple of years have been unprofitable. But because they can manipulate their share price, it makes it look like they're doing well. Now, another comment on that. These executives that have been purchasing these shares have also been issuing themselves more shares. So what they're doing is they issue themselves more shares, then they buy it off the market, share price goes up, and then they're able to sell at a higher price. Another indicator over the last couple weeks that some weird things have been going on is that we've had the most CEOs that have left their roles historically by a large margin. Now I know I'm not too smart of a guy. Maybe I am. But I also know that these individuals know a lot more than I do. And I don't think it's ironic that the CEO of Disney and a lot of these executives took off now, after they've been milking the system for 10 years. So we have a corporate debt issue. We have a wealth gap issue. And now here comes coronavirus. So the only reason, before I get into the coronavirus too, the only reason why the stock market's been high over the last several years is because central banks started printing more money again since September. You had Trump's tax reform before that, which boosted. And then you had printing of the money. Money goes into the banks. Banks lend to the businesses. Businesses buy their shares back. Share buybacks boost share prices. High share prices mean a higher stock market. So this has also been the fakest market we've ever seen historically. But CNBC won't tell you that. By the way, you shouldn't listen to anything you hear on most mainstream news networks, CNBC, Fox, NBC. Typically, by the time you hear it on there, it's too late, and then you miss the boat. So, we have all these indicators that are going on. And then here comes coronavirus. Now, we do know that the death rate isn't very high in the coronavirus, but we also know that it has a high infection rate. That's the difference when you hear about death toll than the standard influenza, is that the normal annual flu doesn't infect half the world's population. This was the Black Swan event. This was the event that no one could have prepared for. And this also seems to be the event that's going to totally topple the economy. And the reason that is because governments are going to have to shut down borders. They're going to have to close down cities. We've already heard here in my local area that be prepared to stay home from school, be prepared for the schools to be shut down. We already know that businesses have been telling employees to stop coming to work remotely. But the fact is that the economy has stopped because of this. China has totally shut down. We know this has already happened in Italy, in Japan, in China. We're seeing draconian measures for the first time ever in martial law. And governments are going to need to do this. The economy will take a hit because of it. But because we have the other issues that I talked about before with the credit crisis, businesses have already been unprofitable. Now they're going to be more unprofitable. And you have the potential to see job losses again. We have potential to start seeing exactly what happened in 07 plus some again. You know, last week was the worst week in the stock market since 2008, I believe. That's sign one. We haven't even heard the actual numbers yet in the United States of coronavirus. That's going to be indicator two. Employees are going to be staying home from work. Companies are going to be less profitable. They're going to have to lay people off. We're also seeing a corporate debt issue. We're seeing the debt issue, we're seeing the issues right now in the debt markets. You know, the Fed is telling us. So last week the Fed also cut rates by 50 basis points, 0.5%. We've never seen that before. Typically when that happens, the markets bounce back. The markets continue to tailwind and dive down another 1,000 plus points. There's already some worry from that point of view, and they're already talking about cutting rates down to zero and then negative. The bond yield, I talked about that this past week. That's close to negative. That's about 0.5% right now, I believe. Once we go negative, that's a negative yielding bond. So there's all these events that have happened. And, you know, why is it important for you as retirees? Well, you want to retire and you want to have your wealth and you want to preserve your wealth. And you don't want to work for the rest of your life. So what I propose is for you to purchase, and this is not financial advice, and I'll frame it as you should consider purchasing some Bitcoin. That might be something to think about as an option to hedge against what's going on here. Because when the credit markets lock up and the stock market continues to take a complete skydive down, you're not going to make money in equities. So your 401ks aren't going to be making money in stocks. They're going to be losing. They could not, but at this point, I think from the indications we've seen so far, there's a good chance that, you know, you can see a reduction in your portfolio, 30, 40+%. That's a normal recession. So if your 401k is exposed to stocks right now, I'd consider kind of looking at that again and, you know, maybe consider bonds. Bonds are still positive right now. The problem with bonds, though, is again, they're going negative. So you're going to have a loss on that investment on your bond. My argument is for Bitcoin and gold. Now, we've already seen gold and silver rally over the last year plus, and there's a lot of evidence that supports we're moving back up into a bull market within the precious metals space. Now, gold and silver typically always do well during recessions and crises. And what we're kind of experiencing now is significant because you're not just going to have value lost in the stock market. The Federal Reserve is going to need to print a lot more money than they have now. They've been printing since last September again. So your money, your physical cash that you hold in your pocket has been devalued. since last September again, and they're going to need to print a lot more. So on top of losing the stock market, you're going to also have a currency that can devalue quite a bit. So we have a currency crisis on our hands too. So gold and metals have always been a nest egg during these crises. That's why you've seen China and Russia purchasing the highest amounts of gold ever historically. Central banks around the world have been preparing for years now for this, and the research is there. So consider metals. There's websites like APMEX, APMEX.com. You can purchase gold at pawn shops and silver from anywhere. Consider looking into some of that. Bitcoin is important to me. That's why I'm running this channel, Adoption, helping people adopt Bitcoin to help save themselves and also move into a digital age with currencies, because I really do believe that the system itself is old. We know that it's outdated. No one likes going to their bank. So I'm very passionate on this new form of technology, but Bitcoin is the alternative. Why? Because it's digitally scarce. Just like gold, you can only take so much gold out of the ground that's in existence. Well, with Bitcoin, there's only so much Bitcoin that will ever be in existence. You don't have to know anything else other than it's digitally scarce, and that adds value to it. So if you want to look into Bitcoin, there's a few different options you can take. And I posted on my Twitter account. I suggest following it, Adoption, ADOBTION. You can also subscribe to my Substack account, Adoption at adoption.substack.com. I give a lot of tips and tricks, but primarily what you want to do is jump on to a website called an exchange, and I'll give you a couple off the top of my head. Kraken.com is one. That's pretty good. I'll make it even more convenient for you. If you have the Cash App, which a lot of people do, you can buy Bitcoin from your Cash App. So I'll go over security in another video and privacy and how to store it. But if you're going to do it, the easiest way right now, I suggest, is to download the Cash App, link it, write a good strong password, write it down on paper, store it away, and then just purchase Bitcoin from there. I've heard some professionals in the space talk about 1% exposure to a portfolio is fine. You don't need much exposure to this stuff. Remember, 21 million ever in existence, and you can break it down 100 million decimal places. So what that means is that this currency is made to last for the next 100 years. There's enough of it that exists online. Yeah, so that's this. It's just important to know. I just remember being in school, and back then it was all about, during university, it was all about learning about what happened during the 2007 crash and knowing what happened within the banking system, and learning about it then, and then being a young person now and seeing this happen again, it's frustrating. It's frustrating. But it's important that everyone has knowledge on this, because most people don't have the opportunity to take an economics course, or they don't necessarily have time to learn about finance or their 401k. But it's important that you have someone that's telling you what is real and what is not real, and guiding you, because most of the time your average financial advisor is going to call you once a year. They're going to check on you. They're going to do whatever they're going to do with your portfolio. You're going to say yes because you trust them, and then that'll be it. But the truth is that most financial advisors, ask your financial advisor about gold. Ask them where to buy gold. Most of them don't even know about gold. They don't believe, because they don't make commissions off that, and they may be misleading. So that's what this channel was made for, is education, educating you on how to adopt Bitcoin. Just real quick before I actually sign off here, there is an example that I can give you for when people actually were able to save their retirements and their wealth. It's happening all around the world right now. any nation that is experiencing difficulties in the economy, such as Venezuela, Turkey, Greece is the example I want to talk about. There are people that I have heard about online that when the Greek crisis was getting real bad, they were able to actually move their 401ks and their retirement accounts into Bitcoin and then save it. They could ride out that storm because they actually had exposure and diversification into, you know, a bunch of different assets, primarily Bitcoin. Why? Because their currency, they were losing money, the bonds were going under. And that's why it's important this time around, because again, it's not going to just be a debt issue, it's going to be a currency crisis too. So we're going to see it on both ends. All right, that's all for this video. What I'll end up doing is I'll do a whole series probably on, you know, the details on, you know, what is Bitcoin, what's, you know, what is money. But again, I suggest you follow my Twitter page if you actually have some interest in this stuff. That's just the fastest way for me to get content out there. If you want to go through the email, you have the Substack account, and that'll be it. So again, everyone, take care.